The hottest thing in finance YouTube right now is the Caleb Hammer Show. If you haven't seen it, he goes through people's debt and exposes it here on YouTube for our entertainment. As you would imagine, almost everybody on the show has high levels of credit card debt. When they're told that they need to close down their credit cards, they then argue that they need to keep them open to keep building credit.
You have to get a credit card to build your credit. You have to have a car note.
And then the host, Caleb, tells them to get the Fizz card.
Talk about the Fizz card, debit card that builds credit. Love it. That's great. Use the Fizz card. Do the Fizz card, which is the debit card that builds credit.
This is supposed to be a debit card that builds credit. It links directly to your checking account and only allows you to spend what's in it. Sounds perfect, right? What Caleb doesn't mention is the $120 annual fee that comes with this card, and that if you don't pay that annual fee, then your Fizz card will be closed down and you will lose all the credit that you've built up with it. So in this video, I'm going to talk about why I wouldn't recommend this card and the near disgusting things that Fizz is doing. If you haven't already, hit that like button and make sure you subscribe because I'm trying to hit 10,000 subscribers by the end of 2025. Okay, so let's first talk about how you get this card. To sign up and manage this card, you have to download the app, which is available on both iOS and Android. There's no credit check when you go to apply, but before you go and apply for this card, you are going to need to pay their membership fee. They have a free plan, but you're not going to be able to get the Fizz card. You pretty much just get access to their app, which is useless anyways unless you pay. There's then the student version, which is $417 a month or $50 annually. If you're not a student, then you're going to have to pay $120 up front, which obviously averages out at $10 a month. After you pay that, you'll then have access to their card. So the way that it builds credit is just like any other credit card. It reports your on-time payment to the 3 credit bureaus, thus making your credit score go up. I believe that it reports the same way as a charge card would as a revolving account. And it is issued by Patriot Bank. Patriot Bank is actually a really small bank. I've never heard of them before. They only have about $1 billion in assets, which is typical of smaller community banks. To put it in perspective, banks like Chase, Bank of America, and Wells Fargo usually have $2 to $3 trillion in assets. After you set it up, it connects to your bank account via Plaid, and with Fizz's smart spending limit, you're only going to be able to spend what's in your checking account. This card also has daily auto pay, so your balance is paid off every single day, opposed to a normal credit card where throughout the month you would put purchases on the card and then pay it off at the end of the month. So this card would essentially just replace your normal debit card that's already connected to your checking account. The Fizz card also has something called Freeze Safe, where if you miss your daily payment, then your card will freeze and you won't be able to use it until you pay it off in full. If you miss a payment, you have 45 days until Fizz reports it to the credit bureaus and your score goes down. Unlike a lot of credit builders, this card actually gives you rewards. You get 3% back in a category of your choice. The categories include experiences, groceries, nightlife, subscriptions, and then transportation. These categories are kind of vague, like I wouldn't necessarily know what counts as an experience. I would assume that's things like movie tickets and general entertainment, but I have a feeling that a lot of merchants wouldn't code as experiences, so you would miss out on that. I'm also not sure if transportation covers gas or if that's just things like ride shares and buses, but those categories don't matter as much. I would assume that restaurants and groceries would be the most popular ones. In addition to your choice of 3% back category, they also have 2 little gimmicky features. They have surprise rewards on the first Friday every month. So usually this is going to be something like a free ice cream cone or a free burrito or hamburger or something from a specific restaurant. And then they have something called flash deals where you get usually between 50 and 100% off of popular retailers or restaurants. This is always capped at like $10 or $15, but you can save some money when these pop up. Now you might be wondering, how does this card even make money? Because you can't carry a balance like a normal credit card, so they're not making money off of interest or late fees, and they're also giving you rewards too, so how is this even profitable? And there's 2 ways that Fizz makes money. So the first is obviously going to be that membership fee. If you're a student, you're going to pay $50, and then everyone else is going to pay $120. They also charge something called interchange fees. Interchange fees are something that credit card companies charge merchants. It's usually between 2 and 3%. Because the Fizz card is a MasterCard, it's 2%. But the way it works is, let's say you spend $100 at Home Depot, they would charge Home Depot $2 for making that transaction. So that's how they're able to give you all those rewards. If you take a look at the app that you manage the Fizz card through, you also get to track all your spending, and you can set up a budget within the app too. So the app's a little bit like Rocket Money or most of the other budgeting apps. And then they also have articles and quizzes that claim that they help you learn about personal finance. Now, this is the part of the video where I'm going to get a little bit pissed off because what Fizz is doing in most of these articles are telling a bunch of lies or half-truths in order to promote their product to financially illiterate people, disguising it as education. So let's go ahead and take a look at just a couple of examples. Under one of their articles, Why Fizz is the Better Way to Build Credit, they say, at the end of the day, any unsecured line of credit is going to have a similar effect on your credit. And then in parentheses, they put, secured lines of credit and authorized user accounts don't have a very strong effect on your credit, and you should generally avoid them if you can. And that is just a flat out lie. First of all, lenders can't even distinguish the difference between a secured and an unsecured credit card on your credit profile. They literally report as the exact same thing. And as long as you're responsible with credit cards, they're one of the best ways to build up credit. And then the other lie is that authorized user effects don't have a strong impact on your credit, and they should be avoided too. And being added as an authorized user is one of the best ways to build up credit. If you get added on an older, more experienced authorized user's card that doesn't miss payments and has credit built up, it's an amazing way to build credit. It's super free and it's almost no risk. I got my brother over a 750 credit score by just adding him as an authorized user on one of my cards. It's not as strong as your own line of credit, but it's not something that should generally be avoided. Let's move on. Later in that same article, they say, it all comes down to how we at Fizz take care of our users. Normal cards from Discover and Bank of America charge hidden fees and interest rates, and they encourage you to go into debt. First of all, you only pay interest if you carry a balance on your card. I've literally made thousands of dollars from credit card rewards and sign-up bonus and have never paid a cent in interest because I pay off my cards every single month. And I swear, hidden fees is just a buzzword nowadays used by fintechs. They claim that Discover has hidden fees. Let me pull it out. Where have I had it? I've had this card for a while now. And tell me where the hidden fees are, Fizz team, because I can't quite locate them. There's no over-the-limit fees, no foreign transaction fees, no annual fee, and they even waive the first late payment fee. The only fees that it does have is cash advance fees and then balance transfer fees, but those aren't normal things that you're going to be doing with your credit cards, and they're not hidden. They're stated very obviously in the terms and conditions. So Fizz, keep my Discover card out your mouth. Let's move on to the next slide, shall we? In another article, there's a section called Why is the Fizz Cashback Special? Student credit cards and normal credit cards have lots of shortcomings, especially when compared to Fizz. How convenient. When it comes to cashback, things are no different. Lots of normal credit cards, particularly student credit cards, offer 0% or 1% cash back. Fizz, on the other hand, offers 25% back around the campus. That means that you pay 25% less at places you already love to go, instead of settling for 1% cash back with a normal student credit card. So first of all, there's terms to that 25% back. You're only going to get that at select universities. And there's also terms to how much cash back you're able to earn. And plus, most of those students are already on a meal plan, so they're not paying for the food on their campus restaurants anyways. And can Fizz please explain to me what student cards are giving 0 or 1% cash back? Because when I think of student cards, I think of the Discover card that gives you 2% back on every single purchase, as well as 10% back for the first year that you have this card. And then after that, 1% back and then 5% back on rotating categories. I then think of the Saver card that gives you an uncapped 3% back on groceries and restaurants and then 1% back on everything else. There's the Bank of America Custom Cash that allows you to choose where you're earning 3% back, just like this card, except you're not having to pay a stupid membership fee. There's the Chase Freedom Rise that allows you to earn 1.5% cash back, but if you get a Sapphire card in the future, then you can use that for travel for way more. Even the weakest of the student cards, the Bank of America Cash Unlimited, still gives you 1.5% back. So Fizz card, maybe just focus on your own card instead of lying about all the other credit cards on the market. Fizz also goes on to say, with a normal credit card, you spend all month and build up a big balance that you have to pay back at the end of the month. If you're constantly using your credit card, this process can drive up your credit utilization rate and harm your score. So another misleading half-truth there by the Fizz team. The way that credit cards work, if you want, you can pay your credit card down every single day, just like the Fizz card, but also as long as you pay off the full statement balance at the end of the month, when the statement closing date comes, which is when your credit utilization actually gets reported to the bureaus, your utilization is going to be super low. And that's not going to hurt your credit score at all. Another article that they wrote says, if you're in college and want to build up your credit score, you've typically only got one option, credit cards. Credit cards usually aren't geared towards the needs of students, and even so-called student credit cards are really just normal credit cards with a student-focused marketing pitch. As if Fizz's credit builder isn't just a normal credit builder with a student-focused marketing pitch, but also there's another half truth in there. There's a bunch of different credit building loans out there. Credit Karma has one, Kickoff. There's a bunch of different ones out there. There's other credit builders like the Chime card, Credit AI card, and also student credit cards aren't just normal credit cards with a different marketing pitch. They're easier to get approved for students. So really what Fizz is doing here is publishing all these articles claiming to help people build financial literacy, but really what they're doing is just telling people a bunch of half-truths or lies in order to get them to sign up for their shitty credit builder. And that's something that I just can't stand for. I also found something very strange. The writer of these articles, Sam Lipscomb, who is also the product and operations lead at Fizz, and the one that is writing all these articles, goes on to state, the Fizz card beats out normal credit cards in literally every category. And it seems by the way that he's writing all these articles, he's very against normal credit cards. But if we take a look at a couple years back, he actually helped write articles for credit card blogs. He wrote articles like how college students can maximize travel reward credit cards and earn elite airline status with these credit cards. So a little bit fishy that a credit card blog writer just suddenly switches up as soon as he gets a job at Fizz. The Fizz card only makes sense if you have literally zero financial discipline at all and you need a credit card that's only going to allow you to spend what's in your checking account. But even then, I still wouldn't recommend this card because you could get a credit builder like the Chime card or do a credit building loan like the one from Credit Karma. And you might argue that
this card gives you that 3% back and you get all those cool little gimmicky rewards.
But here's the thing. Once you open this card up, you have to always use it in your wallet because it comes with a $120 annual fee. And if you want to upgrade to other cards and not pay that annual fee anymore, you'll lose all the credit history that you built up with it. Whereas if you were to go with any of those other credit builders that I mentioned, you can just use it once or twice every 6 months to keep it open. Or if you're not a credit card person, just keep it open and then you can get your apartment or mortgage or car loan or whatever you need. Also, credit builders like Chime or Credit AI also only lets you spend what you put in the spend account. And giving someone with no financial discipline a Fizz card is like giving an alcoholic a fridge stocked with non-alcoholic beer. Sure, that might limit their immediate access to the alcohol, but it's not going to address the underlying behavior. That alcoholic is going to find a way to drink. That fridge isn't going to stop him. Just like a person with no financial discipline can go and open up an unsecured line of credit. As soon as they have a high enough credit score, they can literally just go online and get instant access to a card like the Apple Card and then just run up a balance. So hopefully this video shows don't just go and blindly trust your favorite finance YouTuber. I don't think Caleb Hammer would be promoting this card unless he was getting paid tens of thousands of dollars to do it. Even YouTubers like Graham Stephan have promoted shady products in the past, so make sure you go and do your own research. If you want to learn about a credit builder that I like a lot more than this one, click this video here to learn about the Credit AI card. And if you want to get some real financial education, you can listen to me talk for over an hour and a half, and I'll tell you exactly how to get an 800 credit score. You can click this video here to watch that one. Hit the like button, hit the subscribe button. I'll see you guys next time.